So a growing area of interest in real estate is short-term rentals. I mean, that's nothing new. That's been around for a while now, but Airbnbs, VRBOs, and people are wanting to deduct losses. I mean, again, hopefully you're making money, but a lot of these have a paper loss at the end of the day. So there's the real estate professional, which qualifies you for deducting full real estate losses with 750 hours plus more than half your time, which might be a high threshold for many people to get over. So the short term rental allows you to fully deduct your rental losses with less stringent requirements. You still have to materially participate, which can be as little as 100 hours if you're the only one putting work into the Airbnb. If there are others like property managers and you have, a maid that comes and cleans up the place between tenants, which would be especially applicable if you have an Airbnb in another state. That is, managed, you're not going to go there between every tenant to go and do the laundry and all that. So if you have other people participating, then your participation has to be 500 hours instead of 100 hours.
It's 500 hours per year?
Yes, per year. So 100 hours if you're the only person working on the property, 500 if there's others. But you don't have to worry about it being 50% of your working time like you do with the real estate professional. You can have your full-time job and put that time into the Airbnb, and there could be multiple Airbnbs. In this case, that could be aggregated around. But the other qualification is that the average stay has to be 7 days or less. That should be defined as a short-term rental, or it could be between 8 to 30 days if you're providing like turnkey, like concierge services, almost like you're running like a hotel. So that requires greater documentation, like you're coming in daily to replace their towels and fix the bed, that kind of sort of thing. Then it could be 8 to 30 days to qualify. But for most people, it'll be that 7 days or less average stay. Then all the losses from that can be deducted. Now, the important thing is this is now treated as a business, not as a rental, meaning that this would now go on a Schedule C, not on a Schedule E. So it only helps you if there's a loss. If there is a gain, that gain is now subject to self-employment taxes, which is about 15.3%. You got the 12.4% for Social Security, another 2.9% for Medicare. It is important to note that you might already be maxed out on Social Security taxes if your other earned income is over about 180,000. It is about the break point where you no longer have to contribute any more to Social Security. So if you're making 200,000 a year and you have this short-term rental that is making money, then the self-employment tax is only going to be the 2.9% Medicare, not the additional 12.4% Social Security. But your goal with the short-term rental would be to make it a short-term rental for tax purposes if you're trying to recognize losses. If you have a gain, then it's really not in your best interest to be recognizing it as a short-term rental on a Schedule C.
So Schedule C, can you do depreciation?
Yes.
Okay, you can also do depreciation. And if there's phantom loss from the depreciation and you're a sole income earner, does that loss or any loss from the short-term rental, can that be used to offset against for example, your W-2 job income?
Yes, it can.
Okay, so you don't, going back to what you were saying earlier, it doesn't have to be more than 50% of your time.
It does not.
Okay, got it. All right. That's the tax benefit of running
a short-term rental.
Rental. Got it. All right. Thank you, Ben. Real estate is a great way to build wealth tax efficiently. Knowing the rules is the first step, and the next step is taking action. Plan your strategy with Ben Koala, our expert CPA, financial planner, and attorney. You can find his direct contact information displayed on your screen now, as well as a direct link in the show notes below. For questions on real estate financing and loans, reach out to us directly at Abundance. We serve real estate investors in over 40 states by accessing capital from more than 30 different wholesale lenders. We do the shopping and managing the process for you so you can focus on acquisitions and asset management. If you found this information valuable, please hit the like button and subscribe. We will see you in the next segment.